For the buy, our entry, we have to place a limit order. So the limit was 33,437. So we come here, 33,437. How much you want to trade is up to you. If you want to trade big boy bucks and like 10 Bitcoin a trade, probably not best. 0.05 Bitcoin, okay, that works out. We're trading 1,600 bucks. Place that limit order, place that buy, or just go ahead and do a market order, but you might get a worse trade. Next up, put your stop loss in. Remember, that's a stop loss order. Come back to the chart right here, go over to sell because you'll be a seller for this specific order. Stop limit right here. 30,000, more or less 30,000, 30,000. You're telling the system that if the price gets down to 30,000, sell out. Okay, you stopped out of your trade, trade's over. Make sure you put the same amount as you went long for. So exactly the same. If you're trading 0.05 of a Bitcoin, trade that 0.05 of a Bitcoin. You see the total's 1,500. So yeah, we would have lost a couple $100 if the trade moves against us. Then put in another sell order. Remember, a take profit is simply a stop limit sell order above our trade because this is a take profit. Come back to the order, check the system. How much is our take profit? Our take profit is 40,000. 40,000. Then put the limit as 40,000. Same amount of Bitcoin, press that sell, $2,000 you'd get. Again, if you're trading 1,600 bucks, you would have made 400 bucks. Really good trade. And that is how you put it in the system. All of your orders that aren't executed or haven't gone through yet will be down in your open orders. You can view them, cancel them, and if they have gone through, they'll be in your order history. Let's go back to these risk calculations. Absolutely everything in here has been input on to Binance. Let's go back to Binance, see how this trade went. Remember, we're in around this level, stop loss down here. We want to take profit around 40,000. Here's the next day's trading. Wouldn't have got up there. So 38,500. That was intraday. Didn't finish there, but didn't quite meet our take profit. Again, we're getting a big breakout here, and there you go, bang. We got that 40,000 here. We would have been traded out 40,000 near that previous swing high, and we would have lost out on money. Now, this is one of the downsides, I would say, of putting in definitive stop loss and take profits is, you're going to lose out on longer term profits possibly. But the more lax and loose you are with these orders and the amount that you're trading, it's more risk. So it's up to you, but we would have missed out on this and also this, but we would have made very decent money. And then you can go again with a different trade later on. You can let your profits run. You don't have to put a take profit in there. You can actually just raise your stop loss level to make it so that you will make money out of the trade and you won't lose because your stop loss level can now raise up. So if you don't want to put a take profit in there, you don't have to. You can run your winners if you want, but this is just to show you and you can make that choice as you want. Next example, what is the trend? We're in an uptrend. That is obvious. The 200-day moving average, we're way above it. We're obviously in an uptrend, so we know the trend right now. What is the price action? This is a bullish trend. We know that. Price broke out once. You can see that here. Sellers came in. Price found lots of support, moved up. Sellers came in again right here. This is ripe for a breakout because we can see what is known as a small mini consolidation right here. After big moves, see this day is a huge move. This day is a huge move. So we just traded this one. We just traded this move right here. We went in here and then we sold out around here. Then we have another huge move up to the upside. Again, you might have wanted to trade this, but I'm doing this after this pullback. We have a huge bullish engulfing right here, absolutely huge. And you might have wanted to go in at that point as well. Let's say you didn't for whatever reason, because it had a sell-off right here. Then you had the big sort of recovery day, kind of volatile. You might want to stay out of that market. But then we have consolidation. Like I said, consolidation is key. Let's see where the support is. Support's here, right? We can see that. We have 1-2 days of support right here. After a big move up, you'd expect sellers to be coming in, right? Huge move up. Sellers are coming in. Yeah, they did, but they found huge support right here. There's definitely buyers in at this price around 44,000. Price went up, came down, definitely found support here again. Sellers pushed it down. This is definitely an area of support. Where is the resistance? Definitely here. We can see the price was coming up and kind of found a little bit of resistance here, but also here, 1-2 days of resistance. Absolutely, definitely resistance right there. Let's move in on this. Can you see the candlestick chart? Like we said, classic hammer candlestick right here. It's not absolutely perfect like we saw in those diagrams. Real charts never are. You can see a huge down move, sellers trying to push it down, moving up right here. Definitely a hammer. That's a bullish move telling us that buyers are pushing it up. And for this session, it finished green. We have the support, we have the resistance, we have the trend, and we have the candlestick pattern telling us that we could be in bullish territory. Let's come here to trade. Remember, we enter at the start of the next candle, we place our stop loss 1 ATR from the price that we get in at, and we place our take profit near the last swing high. These are the entry calculations on this trade. Open at 48.80, so you can see that right here. Next up, we need to see the ATR for the stop loss, 4,000. So our entry level, 48,800. The ATR is 4,000. So that gives you 44,880 for our stop loss. And then our take profit, we could say around 57,000 near the latest swing high. So remember, risk calculations, entry price minus ATR equals 44,800. So that is our stop loss. Really great that our stop loss is at or just a little bit below that to give us some breathing room just in case it comes down and then moves back up. Our at-risk position, 4,000 divided by 4880 is 0.08, otherwise known as 8%. That is our at-risk position because we use the level of support and the ATR. You're risking 8% here. $1,000 trade, you'll be risking $80. Profit calculations. Our take profit divided by our entry price, 1.17, otherwise known as 17%. A 2-to-1 ratio yet again. This is our take profit. Here is our area of loss. Here is our area of profit. I like this ratio. It's a 2-to-1 profit ratio. Let's go back to the real Binance chart and see how this trade did. Remember, so we've got our hammer here, we've got our reversal here. How did this trade do? Did it come and test our stop loss right here around 44? We can see that it never even got anywhere near, and yeah, we got out, took our profit on that trade. That was another profitable trade for us on this one. This is our third example in this chart, and this one's a little bit different. So sometimes trades don't go our way, but we put our stop loss, our take profit, see where we end up. Where's the trend? Definitely in an uptrend. We are still having higher highs, higher lows. You can see right here an area of consolidation though. Moving through to the price action. We're definitely still in a bullish trend. We have higher highs and higher lows. There is a mini consolidation right here though. And so with consolidation, we could be primed for a breakout. We also have a bullish engulfing on the candlestick, as you can see. This candlestick, then we have the bullish engulfing right here. It looks to me like buyers are testing this price. 1, 2, 3, 4 days, 5 days, 6, 7 days. I want to go in here. Another price, and you have to look at fundamentals in the market in general, 60,000. It's such a psychological barrier for a price. But at this time, we're in an uptrend, resistance at 60, consolidation, resistance at 60. It's going to break out, right? We're in an uptrend, resistance for a week at a price. The price is consolidating, getting narrower and narrower. We're in for a breakout, either up or down, but we're in for a breakout. We're going to go into this trade. So once more, where is the support and where is the resistance? Right here around these levels, you can definitely see support, definitely see resistance, and we're getting this testing of this price right here. Total mini consolidation. So we enter at the start of the next candle, we place our stop loss 1 ATR away, and we take our profit near the last swing high. Problem is though, there is no swing high. This is basically an all-time high. Let's go to the Binance chart and you can see it right here. We're basically at an all-time high right here. The all-time high was 61,000, then it got sold off right there. Where do we put our take profit? There's no level that we can go off. We just have to kind of wing it here. We're in breakout territory. We really can't have any other level that we place to actually find a take profit. So we're going to have to kind of take an average of what we usually make. So let's say we open at 58,142 on this next candlestick. The ATR right now is at 3,000. So 58,142 minus 1 ATR is 55,142. Where is our take profit? Absolutely no idea whatsoever. We have no other data at this price level. And so we're just going to have to put a number on there. But we can work out our risk calculations. So we're entering at 58,142, 1 ATR down at 55,142. That red line on the chart is a little bit below where it should be. It should be round about here, 55,142. Then we have our take profit. We don't know where to put this. Now, if our stop loss is 5% away from our entry, that is what 1 ATR away is. 3,000 divided by 58,142, 0.05, which is 5%. What is our profit? Well, we're in an uptrend. Let's say 15%, right? Because our